Welcome back to another market maker model. Today we had a market maker buy model. This was February 28th, 2024. As always, I'm a developing student and these are just my interpretations on price. Shout out ICT, let's get straight into it. So as we see here, we end up forming a market maker model here. And as we see, this is a market maker sell model, and then this is the market maker buy model that I will be going over. I'm going over the market maker buy model because it aligns with the times that I like to look to trade. All this, although it is a market maker sell model, it doesn't really align with the times that I like to trade. But as we see here, market opens here. We have buy side, sell side taken, and then we reprice higher. So within that market open, we end up taking buy side, then sell side liquidity gets taken here, and then we take buy side again, and then we take sell side again. So I classify this personally as a seek and destroy Judas swing. That's what I've personally called it. And then we come back down to that sell side, and then as well as that, we form SMT at the lows. So now we have created low resistance liquidity above us, and now we have formed high resistance liquidity during a time of day in which I'm looking to trade, which is that 950 macro to 1010 macro. That's what forms a reversal. Most of the times, or at least when I backtested, when we have a Judas swing that looks like this, where we have seek and destroy conditions, that 950 macro to 1010 macro ends up being a better entry because maybe some traders are chopped up within this. Maybe they've taken losses. They've added positions that are unprofitable, and therefore that 950 macro is going to have more low resistance liquidity run. As we see throughout this model, we end up forming a 5-minute order block. This 5-minute order block that sweeps into liquidity into that higher time PD ray, engages the higher time frame PD ray. Then we come up. We have a change of state delivery. Now we've entered buy model. After we have that change of state delivery. And right here, what are we doing? We're mitigating this imbalance here. And then we're coming back lower we'll get in that in lower chart. And then we have the 950 macro right here. And then we have the 1050 macro right here. And as you can see, these are the swing grades of this model. And right here, we have a standard deviation that lines up with buy side there. So this is what the market maker model looks like. As we see, we have a smart money reversal at the higher time frame PD array, which is sell side liquidity. Sell side liquidity is the higher time frame PD array. Then high resistance liquidity is formed here. We then create a balanced price range here. Look how much buy side, sell side, buy side, sell side. This is efficiently balanced. And then we create an inefficiency here. Market looks to reprice to that during a dead zone here. This could be an entry though. But then we come back in, and then where do we distribute from? 1050 macro up to buy side. And right here, this screen right here is a new day opening gap. It just didn't get registered on my indicator. And then here we have another new day opening gap that we then reaccumulate within. We come back down to imbalance right here into an old area of mitigation. And then we come up to buy side here. So as you see here, old areas of mitigation, old areas of selling will become new areas of buying. And as we see here, boom, right there. And then this level right here. And then we don't really have a nice clean breaker. I would say the breaker's here, I would say, in my opinion. And then here is standard deviation. As we can see, if we just look at the swing grades, I don't think I have a 1 minute chart, but if we look at the swing grades, what do we do at 50%? We consolidate, we accumulate. What do we have? We have a stop on it here. What do we have at 25%? We have a low risk entry. What do we have here at 75%? We have silver bullet. So as you see, in this implied dealing range from this high to this low, we then end up getting these nice signatures that repeat over and over again. And as we see, we have silver bullet right here, fair value gap, boom, right at 75. That's where we end up repricing higher. And here we have standard deviation here, -1 lines up to buy side. That could be a good projection. And then as we see, we have this one right here, -2 to 2.5 is like possible reversal area. And look at where -2.5 pretty much puts, is that high pretty much. I think it might be half a tick off or half a point off. But yeah, look at that. Ends up getting repriced too. And yeah, that's the market maker model.